Hi traders, thanks for stopping by thetradinganalyst.com. This is Taylor and we're going to take a look at a few charts here and I'm going to give my analysis and my thought process, and you're going to walk away from this video with some newfound knowledge on technical analysis as well as hopefully some profitable trade ideas based off of this analysis that we're going to give you right now. But first, if you're not already a member at thetradinganalyst.com, go ahead and give us a visit on the homepage of the website and get to know us a little bit better. If you like these free videos and analysis that we give to you on a daily basis, it's really nothing in comparison to the membership you get once you sign up with the premium membership at thetradinganalyst.com. Once you sign up with that premium membership, you're going to get instant access to the profitable trade alerts that our current members are getting on a daily and weekly basis. It's a great opportunity and we'd love to help you with your trading. Alright, so let's take a look at some charts here. I want to focus on Facebook here to start. And what I want you to notice here is this little upper rail here, channel line. You can see how Facebook has really respected this angle here on its way up. So just remember, this is not bearish, okay? This is just an angle that it's been respecting. You can see each time it peaks, it hits this. Obviously, it hits this and then it goes sideways, hits it again as it heads higher. Same thing here. We hit it again here, head a little bit lower, and then hit it again here. So I want to show you a setup here that proves to be a nice mover if you play it correctly. So what this is a little, it's getting a little extended. What happens is when stocks get extended, they extend over that upper rail like Facebook did here. You can see Facebook being capped by this angle here the entire time. Here we gap up over it, and as you can see, haven't really gone anywhere since then and traded sideways. Now we're looking for a throwback back into this channel. Okay, so what you want to look for is a break of about 165.45. All right, break of that, and we're going to at least hit this 50-day moving average. Again, this is for the shorter-term momentum traders here. Not saying that this is the top or anything like that for Facebook. Just a nice little setup here that you can look for. If we get some kind of a gap down or something on Monday, that's going to be a nice play on the short side. Conversely, if we close over these recent highs right here and over this trend line, you can look for a breakout, and that is about 170. So if we get a close over 170, that's going to be a nice play for an upside move. So you got two choices here. All right, two choices. I don't want to make any predictions about which one's going to happen, but you can play either direction depending on which way it breaks. The next one we're going to take a look at is a nice one here, and it's Tesla. And Tesla, I want to point out a couple things. This main thing I want to point out here is this trend line that started back here in March of this year. You can see several touches here. See it bounce there, right there, here again, and we're really just squeezing right here. So bulls, you want to see a break over this trend line right here. You can see it started here, several rejections there, and we're just squeezing right between these two main levels. Bears, you want to see this break back under this trend line. If we break under the trend line, first support is at 304 level, and then we've got 280 is going to be that next nice level right there for Tesla. So pay attention to these two main trend lines that I pointed out on Tesla. The next one we're going to take a look at is Amazon. Now Amazon, this is one that I do have a bias on for sure. I do think that Amazon is going to head lower. I've got several reasons. We've got a major trend line break that started in the beginning of 2016. So this is almost a 2-year trend line here. Started back here. You can see several bounces here at the end of 2016. Here's a bounce, March of this year. Here's a bounce, June, July, right here the end of July, and then here we are breaking below it. Another thing that I want to point out too is this huge bearish volume. Look at the volume that's been coming out of Amazon. Right here, bearish volume on this candle. Right here, we gapped lower on earnings. Right here, the following day, a lot of volume. Here's another candle right here, bearish candle. You can see a lot of volume came out of this stock. And then the last 2 days, the most 2 recent days on Amazon, again with heavy volume right here. And we're right at this support as well. So I do think that Amazon is going to head lower. Can we get a bounce from this level? We can definitely get a bounce from this level. But overall, if we do get bounces, I do think there's shorting opportunities, as I've just seen this too many times. Too much volume has come out of this stock, and this pattern and trend line break is just too significant to ignore. So I do think Amazon is going to head lower, and those are the reasons why. The next one we're going to take a look at is Google. Google here, not quite as bearish as Amazon, but if you look at the volume here, you can see right here, this day right here, heavy volume. You can see the following day as we headed lower, heavy volume. Right here, these several days right here, you can see heavy volume right here. Those are red days. Right here, several days of big red volume right here. You can see again right here, red volume, big down day with some big volume right there. Again, we're also holding below the 50-day moving average, which is the red line, and we're holding against this support level. You really want to see it bounce off of the support level right away. Kind of like how we did here. Boom, really nice bounce. Okay, but right here, we came in here, shallow bounce right here, and we're just holding up against this support level. So what does that tell you? That tells you that it's building up energy for that break lower. Okay, you want to see it bounce like this, all right? But right here, we're hanging out low and tight against this level. So I do think Google is going to head lower. Next one is Priceline. And again, these are all high beta tech names. All right, these stocks move the market, so that's why it's very key to pay attention to them. So Priceline right here, go back all the way to the beginning of 2016, started this trend. Here's the beginning of it. Got a bounce there, got a bounce there, got a bounce here, here, and here we are, gapping down huge on volume. Look at this volume for 2 days in a row, heavy red volume. And the reason I want to go back to this trend line, the reason I point out how many touches that trend line has is because I want to show you that this stock, Priceline, has really respected this angle, okay? And so when it's respecting that angle, respect, okay, and then now what's changed, okay? Something changed here. We didn't respect that angle any longer, okay? So it's really respecting that angle. Anyone can just draw lines on the chart. Oh, there's a line. Oh, there's a line. Okay, but it doesn't mean anything if the stock isn't respecting that angle. But clearly you can see that Priceline is respecting this angle, respecting this trend line, and all of a sudden something changed. So you want to pay attention when it stops respecting that trend line. Okay, so broken trend line, broke the 50-day moving average, also have the 20-day simple moving average, which is the blue line, crossing below the 50-day moving average, and we're right here at this pretty significant support level. So you can see it bounced here, here, just recently right there, and here we are. We closed pretty much right at this level. So definitely a good risk reward to go long here for a short term pop. So if you, just for example, get long right now, it's at 1793. So you get long at 1793, you can say your stop really, really tight, maybe at 1785, 1782, something like that. So maybe that's, a $10 loss for, if it does pop, I think it can come back up to about 1905. So that's about $120 gain versus a $10 loss. That's a very good risk-reward ratio. Okay. Now I can't tell you whether it's going to bounce here or not, but I can say with more certainty that I do think that longer term price line is eventually going to break lower. Is it going to bounce here and then catch back up to these levels up here? If so, you can go long here, and then I think this is a great place to initiate a short against this 50-day simple moving average, as well as the retest of the gap down here, as well as the retest of the trend line from the underside. Next one we're going to take a look at is Netflix. And Netflix, I pointed out here on Netflix, this is a island reversal pattern. Again, I'm not huge on patterns and their exact technical readings or anything like that, but this is definitely an island reversal pattern. So what makes an island reversal pattern? Well, you have a gap up, big gap up, and then you have some trading here, and then you have a gap down. All right. So obviously there were gap downs here, so on and so forth. But this is a big gap down all the way down to here, and it's remained unfilled. So there's that gap. Here's that gap. So this is the island. All right. When you have a big bullish move like this, you want it to sustain. You want it to trade sideways. You want to just, if we consolidate lower, you want to do it slowly and sideways. You don't want to have a big gap down like this, which is what we got. So it's a sign of weakness. So here we are at the support level. Looks like, again, like I mentioned before, with support levels, you want to see them bounce. You want to see them bounce pretty quickly. And you don't want them to hang out, just hanging out right against this support level forever. Okay, why isn't it bouncing? Well, to me, it looks like it's building up energy for a move lower. All right. So, if and when we do break this support, which it looks like we're going to, the next main support is down here at about 150. All right, 150 is going to be that main support. Let's see if we can get a trend line here for reference. I don't think so, but okay, so here's a pretty nice trend line here actually on Netflix. Alright, so started here in July of 2016. You can see got a bounce here, there, and then here we are, we bounce right off of it right there. So that target here, rather than this 150 like I mentioned before, would be that this trend line here for Netflix. Alright, would be that target because it's so far it's respecting this angle still. We're still above this trend line, so you have to respect it if getting short. So 166 down to maybe 158 would be that short trade on Netflix if we get a nice little move lower below that support. The next one we're going to look at is Twitter. And Twitter, you can see here, huge gap down on earnings right there. Huge gap down. But right here, we made this nice little base right here and a break higher. Alright? A base and a break higher. That's what you want to see at support. So that's what it did on Twitter. but it's coming up to the 50-day moving average, right here, the red line, as well as the high from this gap down. I do think that's a low risk short entry up against there about 1750, as well as the 50-day moving average. If we break much higher than that, I'm not going to like it for a short any longer. So that's a low risk short. I think there's a gap down here that wants to get filled around 1470. Around 1470 is that gap. We saw a big move lower here on big volume. You can see that right here. And on this move higher, you can see this is really low volume. Okay, we move higher. Look at the volume. It's puny. All right. See the volume over here? That's okay volume. It's decent volume. We moved higher. That's what you want. So here's that high volume here. You can see we moved higher. Obviously, we moved lower after that, but it sustained a move higher from 1850 all the way up to almost $21. So that was a big move based off of this volume right here. And you can see huge volume selling on earnings. And then on this move higher, where is the volume? You want to see volume. So we didn't get that. So I do think the best play here on Twitter is a short here. Is it going to work out for sure? No, definitely not. We have no idea. But I think the risk versus reward is substantially in your favor if you consider getting short at 1750 and maybe your stop is a little bit higher, maybe at about 1790. That's about a 40-cent loss versus, if you go down here for the gap fill, that's about what, $3 gain. So 40-cent loss versus a $3 gain. I'll take that trade any day of the week. So that's what you want to focus on. Good risk reward on plays that you think have a good chance of working out. Just because you set a good risk reward doesn't mean that all your trades could be losers. But you want to have good risk reward plus trades that have a higher probability of working out, and that's how you build wealth in the market. So thank you for stopping by and watching this video, everyone. Hopefully you learned something from this and can take something home from it. If you like this video and you're interested in signing up for the premium membership, you can do so here. And once you do so, you're going to gain instant access to the profitable trade alerts that our current members are getting on a daily basis. If you like these free videos and like the analysis, well, it's nothing compared to the membership you get once you sign up with that premium membership. So go ahead, sign up, and see what it's all about. It's a great opportunity, and we'd love to help you with your trading.